I'm Maya Hayaka. Our Money Daily starts right now. Climate change is one of the most pressing issues up for debate at the 77th UN General Assembly going on in New York. Now, closer home, South Africa's new carbon tax that was signed into law early in the year has been facing high opposition from energy-intensive industries. The carbon tax rate is set to increase by a minimum of $1 per ton of carbon dioxide and will gradually increase to reach $30 by 2026. The country's treasury on Wednesday rejected requests to ease the hikes, saying they are far below the IMF recommended carbon price. So which country in Africa is the highest carbon emitting country? Well, that would be South Africa, being the largest polluter with carbon dioxide reaching 7.62 metric tons per capita in carbon emissions. Now, this is closely followed by Libya and Equatorial Guinea, emitting around 7.4 and 7.3 metric tons of carbon dioxide per capita, respectively. Carbon tax is still a relatively new phenomenon or concept across the globe. Uruguay has the highest carbon tax rate in the world, currently now at $137 per metric ton of CO2. Now, just 27 countries across the globe have imposed some form of carbon tax. South Africa is the only African country to do so. However, Cote d'Ivoire, Senegal and Kenya are considering it. Carbon tax is a fee imposed on businesses that produce carbon dioxide to reduce the output of greenhouse gases. Well, I've been speaking to Louis Botha, Senior Associate in the Tax and Exchange Control Department at CDH, and he explains why companies are against the proposed increase.
Too high, it's too steep for business to be able to accommodate and absorb the cost. Second issue they mention is that some of the allowances which apply under the carbon tax legislation currently are not mentioned in the draft legislation dealing with these carbon tax rate increase proposals. The other issue is the issue of mitigation. And what essentially businesses feel they are being asked to do is to, on the one hand, pay the carbon tax cost, but at the same time make investments into their businesses to mitigate the carbon emissions that result from their activities. And the view that they've expressed is that is too much to ask. And then the last point is that the issue of a pass-through mechanism for carbon tax. So perhaps look at something, for example, the value-added tax, where the ultimate effect of the tax is not that there is an add-on at every point. Ultimately, the tax is only paid by the end consumer, but here the tax is added on at different stages, so the effect is compounded.
To what extent has the introduction of the tax actually helped in the reduction of carbon emissions?
One would have to wait and see over time what the actual effect would be in reducing carbon emissions. What we do know, and what Treasury also alluded to in their explanatory memorandum, was back in about 2015, 2016, there was an initial carbon modeling analysis that was done to anticipate or to predict or project what the likely impact would be. And at the time, it was said that if the carbon tax was imposed in the manner as contemplated, that one would have a reduction of between 13 and 26% in carbon emissions compared to if there was no carbon tax by 2035.
What other ways do you think government can consider in reducing carbon emissions?
Maybe two things one can allude to in that regard. First being is that one can take these incentives and build onto them or further expand their scope. Another point is the issue of revenue recycling or ring fencing of the carbon tax revenue. So currently, basically the government collects them into the National Revenue Fund, and they would then determine how the funds must be spent and allocated. And only once the allocations are done is it binding. So carbon tax revenues are just one part of tax revenue. So the one proposal is that, or the one thing to consider is that carbon tax revenue should be ring fenced, that it is used only for measures that would be aimed at reducing carbon emissions.